Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market update. Hope everybody had a beautiful weekend. And in today's markets, guys, a little bit more of consolidation. And in the last 3 days, guys, we really haven't had much price action that was notable, except for the one-day large drop in Apple and some other earnings news such as Nike and Lululemon. You really haven't had much action across the board after Jerome Powell. Take a look at these 3 days, guys. Just some very healthy consolidation after your monster move on last Wednesday's trading. And this week as a whole, guys, should be a fairly muted week. There's really not much in terms of data this week until the later part of the week. So take a look here. On Thursday, we do get the GDP numbers coming out roughly midway through the day. And then on Friday, well, Friday is actually a day off for the markets, but not for the government. So the government will be posting the PCE results here for some inflation. The markets will be closed, but the futures markets will be open. So we'll see how the S&P futures and NASDAQ futures react to those on Friday. But we'll have to take a closer look on that data when we film Monday's video, because I probably won't be making a video on Friday just to recap these two little events here. So with all that being said here, guys, not much in terms of news today. However, indexes were pretty red across the board here. SPY down 0.28%, GOOG down 0.36%, and really everything except for the Russell and crypto largely moving to the downside. Now, tech did have a little bit of a rough start to the morning after we had a news article come out over the weekend that the China trade bans on certain semiconductor products simply continue. So the ongoing tech war between China and the rest of the Western world pretty much is still going on. And in this latest event of news, take a look at what China did here recently. Intel AMD sales to take a hit from China curbing use of its US chips. So what China did essentially is they banned some of the AMD and Intel products and even Microsoft products potentially from being used by the government. Where have we seen this before? Well, roughly 3 or 4 months ago at this point, guys, China banned the use of iPhones from government officials. So that was the first little indication that there was something going on there. And now we have further bans from China. So take a look at the headlines here, guys. Financial Times reported over the weekend, China has introduced guidelines to phase out US chips from the companies and also wants to sideline Microsoft's Windows and foreign-made database software in favor of domestic options. The latest move could make a big dent on the chips firm's earnings, as China was Intel's largest market in 2023, with 20% of revenue coming from China, while AMD drew about 15% of its sales from the country. Microsoft does not break out its revenue from China. In another article, I was able to find that their exposure is roughly 1.5% of total sales that are driven from China, so Microsoft won't be too much affected by this. Now, here's a quote. A total cessation of China government purchases of Intel and AMD CPUs might impact revenue by low single digits. Now, they're predicting about a $1.5 billion hit for Intel and a few $100 million for AMD. But he said Intel could face a higher hit to its profit of mid-single digits to low double digits. So definitely affecting AMD and Intel more on the day. AMD, as a matter of fact, coming down hard on the morning of that. We'll take a look on the technical analysis side of things, but they had pretty much a gap down open, almost about 4% to the downside. And Intel largely the same. They also benefited negatively, right, from a drawdown of about 4.5% early on in the morning when this news was released. And even Microsoft came down and really was down across the day, anywhere between 1.5% all the way as close to 2% to the downside. So those little tech headlines negatively impacting a few of your major tech names. But for the large part here, guys, the majority of the market was pulling back as a whole. It was not only because of that news headline. Take a look at the heat map here. You'll see that for the most part, very big day of consolidation. Not many big red names in terms of like -2, 3+% down. But as a whole, guys, broad market pullback, just some healthy consolidation in my opinion. Big tech pulling back. Healthcare still doing quite decent. Financials also with a hefty second day of pullback after Friday's larger pullback mode. And even the bottom half of the market here, guys, even industrials, really nothing was spared except for a few names here and there. Really a broad market day of consolidation. On the one-day relative performance, you can see that even better. The only two indexes to etch out positive gains for the day being energy and utilities. For the most part, though, everything to the downside, led by industrials and technology in the red. So that's pretty much your headlines that came out for today. As I was saying, guys, fairly muted week as a whole, right? So we won't also be covering earnings. There's really no earnings to be covering this week as a whole, guys. On Wednesday, we may want to take a look at Restoration Hardware, but other than that, there's really not many earnings left as a whole, guys. Your next big earnings start in about 3-4 weeks at this point, when we're going to start off with your major US banks, and then a few large tech names in the names of Tesla and Netflix, which will be reporting in the 3rd week of April. So now that we're through this earnings season, it seems as though it's gone by pretty fast. We're almost about to get into a very new earnings season coming up here in the next 3 to 4 weeks. Until then, we're just going to keep looking one day at a time for some attractive plays at attractive levels and let the market come to us. So let's get right into our technical analysis here, guys. Going to take it very, very simple here today. Going to do our major indexes analysis in terms of our rundown, and then we're going to take a look at our major tech names. And lastly, take a look at my portfolio to see which trades I put on for this shortened trade week. So let's get right into our technical analysis here. SPY. So I did something a little bit different this week just because it is a relatively slow week. I just wanted to derive the expected moves for the week. So you can see SPY expected move to the upside here, guys, is around $523. Pretty much the high end of Thursday's trading. And to the low side, what does the market expect for the downside? Well, about 516, which really comes in line with his big previous resistance area, which is now going to be support, and your 12 EMA is there as well. So those are going to be some of your levels to watch out for on SPY. As a whole, guys, we're still within the context of this gorgeous daily uptrend right here. Bulls still in absolute full control here, guys. What you don't want to see is the bears taking back too much of this move, but as a whole, as of now, no red flags whatsoever. 3 days of consolidation, barely eating into last Wednesday's candle. Huge resistance here, which is now support, and your 12 EMA. So just as I was saying, guys, healthy consolidation, just expecting the higher low for potential higher high continuation. Really on this week, I'm not expecting much news to positively impact the market or negatively impact the market. So really, all trading this week should really be done off of technical basis more than anything. Moving on to QQQs. QQQs also poised to have a relatively flat week. So the expected move for QQQ is about 449, which is the top end of Thursday's trading as well. And to the downside here, guys, we're going to be going about 440.5, which is the lower portion of this uptrending channel right here. And is also coming into a relatively big area of support. Your moving averages are down there as well. So QQQ also should have a fairly muted week. Keep in mind, guys, we are sitting above this green box of support right now. So I'm just expecting a daily higher low for further trend continuation. The bulls are set up very nicely. QQQ is kind of messy in this area. So if we pull it up on the NASDAQ 100 futures, you can see that we're sitting currently right on a very important level of previous resistance, which is now previous support. It kind of looks exactly like the S&P 500 level, which is sitting right there. QQQ NASDAQ is sitting a bit closer. We're a bit tighter, but we still are above it. So really, I'm just expecting pretty much at this point, daily higher low and mount above, continue this daily uptrend to the upside. Bulls really in full control. And even on the weekly, guys, full control as well. Keep in mind, we do have the monthly close happening this week too. So on Thursday, we're going to go over the monthly closes on all of these indexes and see how our momentum for our long-term bulls is still shaping up. Now moving into financials. Financials, healthy second day of pullback here in a row. They deserve it, after 5 days of substantial rallying here, well beyond your all-time highs. Previous all-time highs was around 41.60. We smashed that. We've since been retracing from it, but really no red flags. The bull's still in complete control of this chart. Take a look at your daily 12 EMA. That's going to be the first line of defense, this moving average right here. And your second line of defense is, of course, the previous higher low, which is about 40.5. So your structure is looking very, very healthy right now, guys. Just expecting a daily higher low for potential further trend continuation at this point. If the bears take back too much of the move, could be expecting maybe a lower high, lower low. That would send us into a daily downtrend, which would also be an area of confluence, right? We are still in an area of resistance. We haven't closed a weekly candle above it. So until that time, guys, this is a fairly convoluted area right now. So if financials do get a little bit of a sell-off leading into some weekly consolidation, it would just be very healthy weekly consolidation, guys. Anything above 37, just really looking for a weekly higher low for further trend continuation. What I'd like to see if financials does take a little bit of a breather here in the next couple of weeks, I really need to see QQQ make up for potential losses in XLF. XLF has far outperformed QQQ really over the last couple of weeks. You can see QQQ's been maintained roughly flat over the past 4 weeks, but financials has really been one of your outperformers, right? So if they take a little bit of a breather here and get rejected from this area of resistance and lose your daily uptrend, that'll be fine so long as QQQ bulls are there to make up for the lost ground in financials. The reason that's so important, guys, we always look at these three major sectors, QQQ, financials, and healthcare, because they are the three largest segments in the S&P 500. And as long as, when one is dropping, if the other two can make up for it, it means the market rotation is still healthy. And that's exactly what we want to see. Now, moving on to healthcare. Healthcare also still holding its ground right now, still above the 144.75 mark. Very important level, guys, pretty much over the past 1 month at this point, right? Coming up to a crucial point in time to where if we lose this, it will be daily downtrend and will be furtherance of the weekly consolidation. We've been in weekly consolidation now for about 5 weeks in a row, trapped in this really, really, really tight range. Now, on the weekly, at least, it does look like a gorgeous bull flag at this point. However, even if we were to lose this level here on the daily, right, get ourselves a daily downtrend, we still have so much space on the weekly here, guys. This is just one leg of weekly consolidation. Even if we do push down, I'm expecting downside maybe 143, even all the way back to the previous all-time highs, 142, wouldn't be that bad, guys. Anything above 137 right now is just looking for a weekly higher low for further trend continuation. So if we do dip down a bit lower, I'm expecting larger support to come in here, 143, 142. The bulls should be able to hold that, no problem. And same concept, guys. If healthcare, you can see healthcare here over the past 5 weeks has been doing nothing. Financials has been doing most of the heavy lifting, and QQQ also has been doing a whole lot of nothing. So if financials chooses to consolidate and we get a little bit of momentum on healthcare and momentum on QQQ, well, your S&P 500 guys is just going to grind higher because we'll have healthy inter-market rotation. Now moving on to IWM Russell. IWM Russell, one of the only actually green indexes on the day pretty much. So that was very nice to see. However, right, we are still pulling back from our last high of Thursday, similar to the rest of the market. So where are we now? Well, the daily downtrend was since engulfed by your bulls. So the bulls have now created a decent amount of space off these lows to set themselves up for a higher low into potentially higher high and really start getting this daily uptrend going. That being said, we are still in weekly consolidation. The weekly is looking very good right now. Any pullback on the weekly, as we've been seeing over the past 3-4 weeks at this point, just going to be looking for a weekly higher low, anything above 187.75, weekly higher low for potential trend continuation here into the second half of 2024. In my opinion, as I've been saying on the channel for the past couple of weeks, guys, IWM is so sensitive to interest rates. In my opinion, it's not really going to have the legs to really put in some massive gains until we get closer to that rate decrease cycle, which most likely at this point will be starting in June or July. So I'm really not expecting any huge things out of the Russell before really the month of May. Now, can we potentially just grind up higher ever so slightly here over the course of the next couple of months? Sure. But when you really want to see big moves like this and really start mounting the levels and getting this monthly uptrend really ramped, that's going to need interest rates, guys. So keep a close eye on IWM. Still represents a decent buying opportunity if we dip below 200, in my opinion, but this will be one of the trades that may take a bit longer to play out as it is interest rate sensitive. It is a good level, but as I've been saying, guys, I'm not expecting something like a, test this area and then ramp up for, a 20% rally without any interest rates coming down. Now, moving on to Dow Jones. Dow Jones also consolidating here on the day, but they deserve it, guys. They've rallied extremely hard over the past week. So we're just simply looking for a daily higher low. Beautiful daily uptrend by the bulls right now. Looking for the daily higher low, anything above 38,600, just going to be daily higher low for further trend continuation at this point. We're currently sitting now above our previous all-time high area of resistance. That's now going to turn support, and we have a beautiful area of confluence, which is your 12 EMA. The moving average is sitting there as well. So looking for the Dow Jones to bottom out in this location and pretty much continue this daily uptrend, no red flags. The red flags happen if you take back too much of this move. That's when you open the door for lower high into lower low. And at that point, guys, we'll be looking for more weekly consolidation. But until I see some of those red flags on the dailies, guys, your longer term timeframes are just in complete and total control by your bulls monthly and even your weekly chart here, guys, looking excessively bullish for continuation to the upside. Now, let's move into crypto a little bit. So crypto finally resetting these daily uptrends here, guys. We were on the watch for either a daily downtrend continuation, flush of these lows, or whether or not the bulls would be able to reverse this into a daily uptrend and put an end to your weekly consolidation. And it looks like they chose the latter. So daily uptrend is now regained by the bulls. We now have our new weekly higher low here at about 61,000. Let's just call it for round numbers purposes. At this point, we are expecting now a current break of your previous all-time high, expecting this weekly uptrend to just continue at this point. So the bulls are looking very good after the last 2 days of trading, have really done a great job of mounting above. And now we're back above my little channel that I had laid out, guys. This was the big area of support. I know it's a wide range, but keep in mind, crypto is very volatile. So between 66 and pretty much 57 was the range in which I was saying the bulls were going to most likely find some basing out and some big support levels down here. Seems as though they found them, and now they're back onto rally mode. So crypto looking excessively bullish. Keep in mind, we do have the halving event pretty much midway through April. So it's coming up very soon in the next 2-3 weeks. Should be a bullish event for crypto. Can it be a buy the rumor, sell the news on the actual date and maybe the week after? Yes, but it is a long-term bullish catalyst for crypto. So any short-term declines off of a sell the news event will be met by heavy demand thereafter, guys, in the months that are going to follow. So crypto is still one of the sectors, in my opinion, that should heavily outperform traditional markets this year. Moving on to Ethereum. Ethereum largely doing pretty much the same at this point, mounting above, resetting now into a daily uptrend after putting an end to this daily downtrend here. Bulls are now back in control of the daily, never losing control on the weekly either. So beautiful weekly uptrend. Our weekly higher low is now set. Look, they tagged the 12 EMA and ran from it immediately. So your weekly higher low is now set. 3070 is going to be your new weekly higher low. At this point, we're just expecting another leg of weekly continuation. Resistance levels are going to be put 4100, let's call it. And then at that point, guys, above that is your all-time highs at around 49. Ethereum looking very good as of your most recent 2 candles. New daily uptrend break. So we'll see, can the bulls continue this cycle here and really put in some new all-time highs? Or will we get stuck at worst in a bit of a tightening range as a whole? We're going to keep a close eye on that. In my opinion, guys, we are up for some probable continuation. Most likely, guys, in your risk on assets such as crypto specifically. So moving on to our big tech names at this point, guys. Well, Apple still having a little bit of a negative day. That headline here, this headline did affect Apple ever so slightly as their sales are tied into China as well. So Chinese headlines really have not been kind to Apple over the past 6 months. And this was just another iteration of that. So Apple once again challenging our lower areas. Almost came down directly to the expected move here today, guys. The expected move for the week was 169.11. We came all the way down to 169.50-ish pretty much. So Apple bulls still looking to defend these lows. Keep in mind, if we do lose these lows, guys, well, your weekly downtrend at that point simply continues. And we look to the, previous 52-week lows pretty much at this point. 166.08 is going to be the crucial area to hold for your bulls. It's your last stand in this whole area right here before we have to derive new support levels further down into the 155.150. Now at this point, guys, I am still confident in Apple's ability to defend this area. I think that the news has not been kind to them, at least in the last month. But in terms of the longevity of the company, I don't believe that any of their long-term business has been affected by these short-term news catalysts. That's why I do believe that Apple should be able to maintain these levels right here. And if the rest of the market continues grinding higher, I would be hard-pressed to believe that they're going to leave Apple in the dust behind. So we do have some potential bullish catalysts just in terms of continuation trades for the rest of the market, potentially pouring into Apple as investors may see some newfound value in Apple currently. That being said, short-term timeframes here, guys, the bears are still in control right now after the lawsuit drop, right? So hourly downtrend looking to protect these lows. So we'll see, can Apple reverse this into an hourly uptrend over the course of the next day or two? And then we'll see how much of this extreme move down can we recapture. We have lost the daily uptrend by flushing your most recent lows. The daily downtrend will be expecting lower high into lower low. Now we need to see how high is this lower high going to be. If we're talking about a 80 to 100% retracement, then it's going to be a lower high, and probably the bulls have a good shot at higher low and then moving into a new daily uptrend. But if your hourly time frame peaks out and reverses, and we've only gotten as high as 172, 173 before rolling over, that's when you might see the daily downtrend continuation and weekly downtrend continuation as well. You guys know my opinion on Apple. I'm still extremely bullish on this company. Down in the mid 170s, even mid 160s is a very attractive level for Apple in my opinion. So we're going to keep watching this one very closely. Now moving on to AMD. AMD as well, you know, coming down here a bit, 0.57% on the day, but it was much worse for them. Take a look at their gap down open, which the bulls bought wholeheartedly at that point, right? So on the morning, they were down, 4.2%, which is a very hefty drop, and then proceeded to pretty much erase the entire loss before, tapering off into the end of the day. But very decent recovery from AMD. We are still in the context of an overall daily downtrend at this point. Your most recent leg is here. So if we are to get a furtherance of this bounce in the next few days, I need to see an engulfing move of 187.71. If we can get above one, let's call it 188. If we can get above 188, the bulls set themselves up with the best possibility of creating the space for a higher low into daily uptrend conversion here after having been stuck in this daily downtrend now for a better part of the last 4 weeks at this point. Good thing we are coming up on this big area of support that we've highlighted in the past, right? So this has been the chop zone now for pretty much the past month and a bit on AMD. So that's why your bears are having some difficulty really plowing down into this area. This whole zone acting as support. I still like playing AMD, guys. Anywhere in the mid 160s down to low 160s is a very juicy spot. It's the lower end of your weekly support zone here and is also your previous all-time highs, which is why that area is additionally a very large support area. So I'll continue to play AMD as it is within the confines of this lower 170 to 160 range. All in all, looking good. Just need to see a little bit more work from the bulls. And obviously, guys, if we just keep downtrending, well, your short-term bears remain in complete control, then we need to protect these lows. 160, 120 cannot lose, because then you would lose the weekly uptrend and may set up the bears for a weekly attempt at a weekly downtrend. We'll attack that if we get there, but now still the bulls do have a decent amount of support below them, so looking for this to act as a reaction zone. Now moving into Amazon. Amazon looking somewhat decent as well, trying to crack above the 178 level of resistance here, right? Huge previous resistance on Amazon 2020 and 2021, and it's proving to be quite the difficult task for Amazon to mount above this level again. We've been really stuck here for a better part of the last 5 weeks at this point, but it is an extremely attractive bull flag in my opinion, guys. They really don't get much better than this, right? Beautiful weekly uptrend, and now your most recent weekly leg. This is your bull flag right here, guys. Top end of the move, consolidating, really not giving back a lot, trying to hug this resistance level as much as they can. And it comes back to that the metaphor, right, guys? If you knock on the door 4, 5, 6 times, it's only a matter of time before somebody actually opens the door and lets you in. And I do believe that Amazon has amazing fundamentals for this year. I don't believe that they're going to be stuck below this area for much longer at this point. Next area of resistance is going to be 187, 188, which is going to be your all-time highs. So Amazon definitely looking extremely bullish. Daily uptrend right now, weekly uptrend, and monthly uptrend as well. So all momentum pointing to an Amazon break of this level. Now, if it goes the other way, if we break to the downside, however, and flush these lows right here, 173.30 pretty much, well, you'll lose the daily uptrend. At that point, we'll just be looking for a bit more tightening up here on the weekly range, but no red flags as of yet on Amazon. Love this company, which is why I did one of those leap call contracts last Friday, attempting to play the breakout of this zone. Now, moving on to Google. Google also looking very decent today, down 0.41%. But they were down a heck of a lot more on the day here, guys. Take a look at your morning candle on the open, and you can see Google was down, about 1.8% at a certain point of the day, almost 2%, and largely recovered a majority of those losses over the course of the day. So Google still looking very good, still in a net daily uptrend right now. Daily higher low is set. And at this point, guys, we're just maintaining. I know it's ugly because of this gap right here, but it is a pure daily uptrend right now. So we'll just be looking to really maintain our progress right now. Break of 152.80 would just mean the next daily leg higher is started at that point, and we'll be looking for a break of 155, which is your previous all-time high. Google really looking amazing, guys. This engulfing move of this weekly downtrend that they had right? One weekly candle right here basically took back the last 2 legs of selling, which is very, very bullish, extremely bullish engulfing move. And even if Google were to lose these levels for some reason, guys, and set a daily downtrend, go for the gap fill, we're just going to be looking for a weekly higher low. And that would be so juicy, guys. If we come down here, down into the 145, 144 zone, it may be one of the last times this entire year that it does that before moving on, guys. Google is one of your big tech stocks that has the cheapest valuation out of them all. And I don't believe it's going to be like that for long, which is the same thing with Apple, right? So Google was getting hit with negative news headlines after negative news headlines after negative news headlines. It came down into an area that provided extreme value for investors, and people just bought the dip heavy. I do believe the same thing is going to happen to Apple. I don't believe it's going to be that long for that to happen on Apple either. So Google looking very good, extremely bullish on this stock. Moving on to Meta right now. So Meta also looking not too bad, 1.29% down on the day today, but still in the context of this gorgeous daily uptrend. We're going to keep an eye on our 12 EMA. We're really right there now, and Meta has usually defended this 12 EMA pretty well in the past here, guys, especially when it's in a daily uptrend. You know, here it was in a little bit of a tightening range. We lost it a few times, but now that we've regained the daily uptrend, Meta should be able to defend this area right here. If for ever which reason, guys, we come lower, keep an eye on 482. Break 482, you lose the newly found daily uptrend and maybe due for some daily downtrend into weekly consolidation. But unless the entire market consolidates, guys, I don't think that Meta is going to follow that pattern down unless the entire market consolidates or the company has some negative company-specific news. I just don't see it happening. At this point, I'm expecting full trend continuation, expansion from Meta as well. Weekly is looking absolutely gorgeous, right? Beautiful weekly uptrend right now. Just looking for continuation past 525, and at that point, we're off to about 550 area of psychological resistance. So no red flags on Meta whatsoever. Now moving on to Microsoft. Microsoft down 1.37%. They really got hit a little bit by that China news and were not able to recover for a majority of the day, but still within the context of a gorgeous daily uptrend on Microsoft at this point. 12 EMA is very close, and we're also coming back pretty much to our the area of the breakout, right? So we were trapped in this range for a very long time, about a month and a half for Microsoft, right? And now we've broken out of the range, maybe just coming back to test the top end of the range again before running, but Microsoft is no stranger to that. We've had weekly consolidations like that prior, you know, in pretty much December and January. Beautiful move up, consolidation sideways, another weekly leg up, consolidation sideways, and now probably another leg of weekly continuation up. Would not be surprised for Microsoft. So I do believe if we do come down and retest this lower area right here, 415, juicy little opportunity for a little bit of a swing trade for continuation. No red flags on Microsoft's business as a whole. Now moving on to Netflix. Netflix also just grinding higher. I keep highlighting this, guys. Netflix, I mean, it doesn't move that much on an intraday basis, but, you know, add all of these small moves back to back, and Netflix is still up, you know, after their earnings. They are pretty much still up about 17% from the after earnings candle. If we were to take it prior to earnings, right, since last earnings cycle, they're up about 27%, and their new earnings is coming up pretty much Thursday, the 18th of April. So in about, you know, 3.5 weeks from this point in time. So looking very good on Netflix, still in the context of it's not pretty, but it is a daily uptrend right now. Netflix, we're going to really be looking to them for them to protect this 12 EMA. You can see we haven't lost the 12 EMA ever since earnings. At this point, we're now above our most recent area of resistance, which was the 620 zone. So now the next target, guys, is going to be our all-time highs, talking roughly $690 to about $700 resistance. And unless something stands in Netflix way, guys, I just think it's just going to grind higher in this little area right here. You know, maybe achieve 640, 650 potentially at the top end before getting into our earnings. And then on earnings, guys, where we might, if Netflix does well again here, guys, 2 levels will be coming up: all-time high breakout or a potential retest of the 575 level, which is such a strong previous area of resistance for the stock. Could be acting as juicy support if ever we pull back significantly after earnings for some reason. That would be a likely retest area, and I would highly be interested. But for now, guys, everything just looking very good on Netflix. Keep an eye, 12 EMA, lose the 12 EMA, can lose the daily uptrend, can go into weekly consolidation, but anything above 550, just looking for a weekly higher low, very juicy uptrend indeed. Now moving on to NVIDIA. NVIDIA, the anchor of the entire stock market at this point, dare I say, right? NVIDIA up to about $950 currently, looking very good. Next target will stand to be the $1,000 psychological resistance at this point. We are in the context of a gorgeous daily uptrend right now. You know, it was really trapped in a bit of a tightening range leading into Jerome Powell. And then really after last week, we were able to get that daily uptrend going once again. 12 EMA should be your first target for NVIDIA stock. You can see how few times they've lost it, guys, all the way from starting the year back in January right there. So bulls in absolute full control right now. No red flags. Any move lower, just going to be looking for a higher low. Anything above 857, just looking for higher low into higher continuation. And if we pull back a little bit here, guys, your first touch should really be this previous resistance area, right, that we just broke out of. Should now be support. This level right here is going to be about the $920 area. Your 12 EMA is almost catching up there too. So it could be a little bit of a confluence area. If ever NVIDIA consolidates tomorrow and Wednesday, it's most likely going to result in a little bit of a lower high and probably move on to higher highs next week, as long as the market just keeps grinding higher and we don't get hit with negative macro news on your Thursday and Friday session. Now moving on to Tesla. Tesla trying its best to put in a little bit of recovery here today, 1% to the upside. Now Tesla, once again, guys, we are in a daily downtrend. The bears have just most recently set the lower high. Now we were looking, can the bulls protect your previous lows and set a new daily uptrend in motion? Well, we have bounce day number 1 working towards that here today. So we'll see, guys, if we can break 178 to the upside, we will have a new daily uptrend. And at that point, we want to break out of the 180 zone. 170 to 180 is pretty much the zone in which we're trapped right now. Big area of previous support, and it has been acting as decent support for Tesla in the past 3 weeks. The bears really not able to bring it much below 170 for an extended period of time, right? Only about 2 days, and then it snapped right back up in this area. So we'll be monitoring the break of 178 very closely. If we get our daily uptrend, then we just have to look, how long does the daily uptrend go? Why is that important? Because we want to see how much of the weekly move can we take back, right? If it's a weak bounce before losing the daily uptrend again, like this, right? In the context of this sell-off, this bounce right here was relatively weak. We only got a roughly not about 30% bounce on the whole move. That's not enough, guys. That's why it was very, very easy to predict the rollover. Well, same thing down here, guys. If we get a daily uptrend going here, and let's say in pretty much next Monday, right? Because next Monday they report their deliveries. If next Monday deliveries are bad and we reverse this daily uptrend here, well, most likely we will be heading to new weekly lower lows. And at that point, we have to watch out. The next target is going to be around the $150 mark. Tesla's still trapped, guys, on every single large time frame. Monthly is trapped. The weekly time frame is trapped as well. And your daily bulls are now trying to put an attempt in. So Tesla not out of the woods yet. And I've said it before, I won't be trading this one much before we get deliveries. And if deliveries are negative here, guys, I'm not probably even going to touch it until we get our earnings. I need more information by the company as to how they're going to address the demand issue and how they need to put out a reasonable expectation here, guys, of demand over the next 6 to 12 months, because interest rates is affecting their business considerably. We just need that guidance here, guys. It's going to allow us to draft more accurate revenue and especially more accurate EPS and margin numbers. So take a look at those two events happening very shortly on Tesla next Monday for deliveries, and then earnings Wednesday, April 17th. Now moving on to Palantir. Palantir not looking too bad at all today here, 1.36% to the upside. So Palantir, we are still looking for the potential daily uptrend shift, right? We had the daily uptrend here, and then we lost it by cutting these lows right here. So now what we're looking out for is, can the bulls put in a higher low as opposed in relation to 23? If we can do that, and you can see here today, right, we're trying to put in a higher low today. The bulls are trying to regain this hourly time frame. So if we maintain this new hourly uptrend into tomorrow's session, then we'll be looking to crack these highs right here, 25.31. Break 25.31, guys. Your daily uptrend is back in motion. Your weekly higher low is set, still in the context of a weekly uptrend, barely holding it. And if we do get this daily higher low, guys, I strongly believe that Palantir will have a next leg up. And at that point on the weekly, we will be targeting the upper end of this range right here, $28 to the upside. So keep a close eye on the breakout of 25.32. Get that breakout, And most likely, guys, the probabilities do favor continuation all the way up to 28. However, fail this over the course of the day tomorrow and Wednesday and start looking towards these lows here, guys. Well, Palantir may just flush the lows. And if they flush the lows into daily downtrend here, into further weekly consolidation, I am looking to buy 21 down to $19. Huge area of support, big area of previous resistance should now be acting as support. The moving averages are down there as well. So I just want to get as low as possible, as close as possible to about $20, really get that going. Because at that point, we're just really looking for the monthly higher low for further trend continuation. And 2024 should be a very decent year for Palantir. I would highly guess that they're likely going to be able to hit this $28 price target here, at least within the next month and a half. Now, moving on to PayPal. PayPal having a decent day as well, 2% to the upside, right? PayPal really in a beautiful context of a daily uptrend at this point. So we are still in pullback mode ever so slightly, still just hunting for that daily higher low, anything above 62.50, daily higher low for further trend continuation. Now we are above all of our major moving averages here, guys, and now healthily above. We're above the green line, which is your 200-day moving average. We haven't been above the 200-day moving average, guys, in literally 2.5 years at this point, right? Almost 3 years. So that's crazy, except for this very brief period when PayPal had the shock the news announcement earlier on in January. This, however, is a lot more of a consistent move, healthily above our long-term moving average and decently above our short-term moving average as well, in the context of a daily uptrend. Also in the context of a new weekly uptrend as well, which just continues to march on forward. So look at this beautiful weekly trend breakout right now. We're in the process of trying to reverse into a monthly uptrend. Monthly uptrend would be a break of 68.19. You would have your first monthly uptrend on PayPal in pretty much 2.5 years. So the breakout is real. I've been calling this one for a while here, guys. When we broke this trend line to the upside, I was saying look out for price appreciation off of just a technical breakout trade, and seems as though we're getting it. My next target for PayPal at this point, guys, you see it best on the weekly, is going to be the $75 mark. So keep a close eye on that. Looking very good on PayPal. If we do come back down here, 62 level is where I'm going to be looking to make some short put plays myself to trade this stock. Don't want to be chasing it. Want to wait for it to come back to me. If it can come back into the 63s towards these moving averages, that's going to open up these 62.50s, 62s for me, and I'll be more comfortable trading it down below here. Heavy area of previous support as well. So that's going to be the new level that I'll be watching out for. This one is pretty much over and done with. So we'll be looking out closely here. 62 to about $61 seems to be the new sweet spot for PayPal. So that's pretty much everything for today's stock market. Now let's take a brief look into my portfolio. All right, guys, so taking a look at the portfolio here, you will see that year to date, we are now only up 3.75%. Yes, we had another 1.5% decline since the Friday session. Why? Well, guys, that's pretty much because a lot of my portfolio right now is Apple, Nike, and Baba, and they all had negative days to the downside, right? Apple with a pretty much, 1% day to the downside almost. And then you had Nike also, Nike not having a very good day since its earnings, pretty much. Nike down a little bit here today, not that much, but still down. And then you had Baba down significantly as well, about 1% to the downside here. So that's pretty much your declines on the portfolio for the day. Not much other than that changed. In terms of the new positions, however, we did write a few AMD contracts right here, so you'll see those. I have 2 contracts for the AMD 172.5s. Now, I was pretty upset this morning here, guys, because I had an appointment in the morning. Usually I hit these charts about 9:30 a.m., but I wasn't able to get to my computer much before 11:15. And at that point, guys, a lot of the plays that I recommended in yesterday's video, AMD, Intel, Apple, they all moved significantly higher after the open, so I wasn't able to hit these lows. I really wish I could have hit these lows with some of you guys potentially, because those were such juicy levels here, AMD down here when it was pretty much at the expected move that we had derived, right? 172.50. You could have found the 167.5s. The 165s were paying almost close to $1 at that point. And by the end of the day, you could have rolled out, you could have just gotten out of those contracts in one single day of trading. Was a heck of a bounce. Intel was largely the same. Such a beautiful trade area down here. And also even Apple, right? Apple in the morning dipping down 169.66. Could have got the 167.50 puts, for at least 0.5%, about 90 cents on the bid at that point. So it was a very decent early morning. I was just not able to hit it. So when I got back, I had to kind of, well, chase. It wasn't really chasing. The position areas that I wanted are still the same. It's just I got a bit less premium for them. So such is the way of life sometimes, guys. Sometimes you hit them big, sometimes you just ever so slightly miss them, but the trade ideas were there. And for all of you that were paying attention, those could have been very juicy plays. So we have the 172.5s that we wrote when I got back to my house, and we were able to get those for 85 cents. So that's, pretty much almost roughly 0.5%. I was relatively happy with those. Would have loved to get AMD lower than the expected move, right? Down to the 167s, but they just weren't available, guys. When I got back here, we were really trading up, waited for a little bit of a dip. At least I got a little bit of a dip out of it, but still, guys, I could have gotten the 167s. I'm happy with the 172.5s. Not too big of an issue there for me. So we'll see how those play out, guys, until the Friday close. Then we wrote the Caesars 40.5 puts. Those were also featured on my video yesterday. So Caesars expected move for this week is about 40.11, and kind of same concept. I mean, earlier on throughout the day here, guys, they were pretty much trading. When we opened, they got pretty much as low as about 41.33 before moving a bit higher. So when I found these, they were pretty much right around the 41.50, 41.60 mark. So I took the trade right there. Fairly juicy trade on Caesars. I've been playing this one a number of times in recent history here. Really love this whole big support zone down here, 40.5 all the way down to roughly, the higher end is about 37.38. The true lower end is about 31, but usually the first line of defense up here, $40, $38 tends to hold up pretty good. So I went with the 40.5s, a little above the expected move, but still relatively happy about it, guys. I still do have some decent cushion, cushion of about 3% to the downside. There's only 3 days left of trading, not expecting a big week this week. So we'll see how those play out. I got 20 cents average price for those, roughly 0.5%. Then we went with some BABAs. We went with the BABA $70 puts for the week. So BABA is one that obviously I have been assigned in on the channel for a while at this point, right? And BABA has really been trapped between this pretty much 76, 77 range and to the lower end, roughly 70. And now I know it spiked down there once briefly for a couple days down into the $67, $68 range. But for the most part, you can really derive a clear trading range here of about 76 all the way down to about $70 with our most frequent price points, right? So I'm just looking for BABA down here, $70. I didn't get that much premium on them, unfortunately. Only really got about 24 cents. Now, that's not quite 0.5%. 0.5% would be 35 cents for a full trading week. But still, for only 4 days of trading, I would have liked to get closer to 30 cents. But still, anything is good for me on BABA right now. Even if it doesn't exactly represent the 0.5% rule, it is still an average down position for me. My average cost on my existing 100 shares of Alibaba down here, the true average cost with all this premium that we wrote against the position since being assigned at 82, is down to about 76.50. So my average cost is there. If I do get assigned at 70, guys, that'll pretty much bring my average cost into the about $73 range, which is a much more attractive price level if ever we start mounting a couple of weeks worth of rally. So that's what I'm going to be looking out for on BABA. As long as we trade down here in the $70 range, guys, it's so cheap for this stock. Now, I understand that this stock doesn't really, has been kind of caught, right? It seems as though sometimes it wants to run with the market, right? But there's just something holding it back. Now, what is that something here, guys? Well, in my opinion, it's really the institutions, right? Institutions over the last 2 years have gotten a little bit scared from the China trade, not only because the Chinese economy hasn't been performing up to standard, but also because of the technology war that's been going on between pretty much China and the Western world, right? And a lot of institutions, when they see that, when they see, different tariffs, technology war at stake here, China's economy not going so well, a lot of institutions are very hesitant to deploy billions, tens of billions of dollars into these stocks. Sometimes the macro risk is just too important for them, but I still do think that it's a very decent trade opportunity, guys. You have to be buying these things. There's a reason that they're cheap, right? They're cheap because no one wants them. That's why the valuation is pretty much so cheap. But all bad things also come to an end. All good things come to an end too, but bad things as well here, guys. So I really believe in the long-term fundamentals of Alibaba. I love this stock as a whole. I mean, the financial metrics are insane for it. Now, the market doesn't seem to care that the financial metrics are very, very attractive for it. But when that trade does come around, and it will come back around, they always do, the different trading narratives, right? I do believe that for Alibaba, guys, $90 to $100, this stock would still, on a fundamentals basis, it would still be cheap. So that's my expectation for Alibaba price over the next 6 months as we kind of, take a lot of more uncertainty off the table. I do believe that Alibaba should be poised to hit at least $90 here within the next 6 months, if not even $100. Stock would still be cheap, in my opinion, even at those levels. Now, the next trade we took here, guys, was Intel. Intel was also featured in yesterday's video. I didn't get the most out of it. Obviously, I would have got the most out of it if I would have been here right at the open, right? You could have gotten, oh my God, you could have got the 39.5s. You could have got the $40 puts here for very juicy premium. Now, by the time I found this play, obviously, it was already currently around where it is right now, 41.80-ish, 41.75 here. And I was able to fire this trade off here. Got about 0.5% for it, 22 cents for the 41s. Now, the expected move on Intel for the week was about 41, 43. So I'm slightly below that, slightly at $41. And $41, juicy area, as I was showing in yesterday's video here, guys, really coming up on a very juicy area of support. So really happy in taking the trade at this level. Now, our last trade was pretty much, actually, that's it. We still have the Apple calls from last week, the 180s for May 17th and the 180s for May the 3rd. So we'll keep a close eye on those. Amazon still have those calls on deck as well. I don't know why it says 0 here, but these are the I can't even see them right now, right? So these are pretty much the calls that I purchased last week. Right, we're up about $100 on those so far. Still looking for the breakout play on these Amazon Leap calls. These are for March 21st all the way into next year. I think they're, if I remember correctly, guys, I believe they're 160 calls. So they're either 160s or 155s, but they are in the money. So unfortunately, it says 0 for now. And then we also have the rest of our swing trades still underway. And, Nike just lagging behind here, Baba lagging behind, Apple lagging behind as well. So I just wanted to bring up a few things that were noteworthy just before I leave here, guys, right? The themes of trading, because when you look at these positions, guys, I've been stuck in them now for a while, right? Nike and Baba especially, just stuck in them. So if you don't want to get stuck in some of these trades like I did last quarter, expecting a company turnaround that's now taking longer than expected on both Nike and Baba, unfortunately, well, here are some of the trades that we need to follow. If you really want to keep your trading extremely simple this year, just stick to these themes and you should be fine whether you're running, regardless of the strategy you're running, as a matter of fact, but especially if you're running the put wheel strategy and you don't want to get trapped in stocks for too long if ever you get assigned. Well, the best to trade. So here's your themes for the year, and these should continue for the rest of the year, in my opinion. The best to trade, low risk, AI plays. So think semiconductors, think big tech, right, with cash-rich positions, and think other profitable tech, maybe not the Magnificent Seven, but maybe companies like CRM, right? Different companies that are very profitable, have a lot of cash on hand, low debt. They will continue to outperform over the course of this year. Another one will be experiences, travel, casinos, hotels. Those have all been performing extremely well over the past 6 months, and I do believe that should continue as well. There really isn't any travel stocks that are in extended declines or trapped at low price levels, guys, for the past 2 years, other than really Caesars and maybe even MGM, which hasn't really lifted off that much, right? But you take a look at a couple other ones. Expedia stock is still relatively low here, but I love their earnings. They should have a great year. Airbnb has been up significantly. You can look at a company like, let's say Hilton Worldwide, right? Look at Hilton stock has been performing outstanding. They had very good guidance. They believe that the travel trade is still prevalent. Even Marriott hotel chain as well, right? So travel and entertainment, guys, seems to also be an outperforming sector for the remainder of the year, and I don't believe that'll change. Healthcare and financials, those are going to perform very well this year as well, as rates are going to come down the later part of the year. And those two sectors had been fairly muted last year. They're just now finally starting to run, or have been running since November, but I think there's a lot left there. In terms of the ones that are tough to trade, the ones that I've been avoiding more and more now in my weekly put wheel, as you may or may not have noticed, I've pivoted a little bit myself. EVs, I am not touching EVs anymore for at least the next 3-4 months, guys. Not until the rates come down. I just don't see a necessity to immediately trade these, largely because it's a big purchase for most consumers, guys. When Jerome Powell drops rates twice, let's say he does 2.25% cuts, right? Brings the rate down from 5.25 to 4.75. a car loan will still be 7.5% for most people, right? So at that point, the demand's not going to come back in the snap of a finger. It's going to take some time. That's why I don't believe there's any urgency for this trade. Second trade for the exact same reasons is solar. Those companies have just been down in the dumps a majority of the year. And although these two sectors do represent some good buy the dip opportunities, you could buy the dip and just get stuck in them as they just hold flat or whatnot, because there's no extremely positive catalysts for them until rates come down, unfortunately. Number 3 is going to be unprofitable tech or small cap tech. That's also not yet profitable. Guys, there's so many opportunities in larger tech names that we don't have to go for unprofitable tech just yet. In my opinion, same reason. They're rate sensitive, they're high risk right now. May as well just stay with the ones that we know are profitable and the ones that have had good earnings and that aren't really affected by these macro events, right? Number 4 is going to be consumer discretionary. Stocks like, think the ones that, I got trapped in recently, right? Nike, stocks like Starbucks, even a stock like McDonald's, consumer discretionary, is somewhat down now on a year-to-date basis, right? So a lot of these stocks are just having a troublesome time. I mean, you saw it on the Lululemon earnings last Thursday, right? At that point when they reported earnings, they're just not doing well, guys. Consumer spending has been down. Even the dollar stores, right? Just consumer discretionary spending has been down. So anything that's too exposed to consumer discretionary, guys, I will not be playing as aggressively. I will need to see a heavy one-day dip for me to be swing trading this. I'm just not interested because of the fact that you could get stuck in these trades and it could take a while for them to come back, guys. They're just not the popular trade. All the money is going to these 3 things. And the last one is China. So although I do have some exposure in Alibaba and I do love the company where I bought it, I just don't think that these things are going anywhere fast anytime soon until the macro headlines really give us some lift in that sector as a whole. So China plays, other than my current Alibaba position, you don't really see me aggressively playing any other Chinese companies such as Pinduoduo, Baidu, JD.com, or other ones, you know what I mean? So those are just a few of the trades that I'm just going to be avoiding. It's not saying that these are uninvestable, that you shouldn't maybe try to build a long-term position. Of course, by all means. But if I'm looking to swing trade things where a greater emphasis is put on the time in the trade, right? Obviously, I run the put wheel strategy and I'm selling options premium. Now, if I get stuck in a position like Nike, right, for the past 3 months where it comes significantly under my strike price, it's not that volatile of a stock and I'm not able to write many options on it that frequently, well, it's just kind of dead money at this point, right? Just kind of waiting for the stock to recover. So I want to minimize those moving forward here for the better part of the year. A few of those trades were my mistake in trying to jump the gun on the trades and thinking that those narratives were going to turn around quicker than they were. But unfortunately, guys, with the hotter than expected inflation we got January and February, with Jerome Powell saying higher for longer, even though he's happy with the progress of inflation, it just leads me to believe that maybe I underestimated the time for which some of these stocks can be maintained at lower levels, and Wall Street just won't care because there's so much other money to be made here. So before we see the money from here rotate to here, guys, I think we need to take more uncertainty off the table, and that will really only come as we get closer and closer to the rate decline cycle. So hopefully that was insightful for everyone here into a little bit of explanation as to which trades to take. Some of the trades that I'm looking out for currently, guys, are going to be this one. So this is your cybersecurity ETF. Really like it a lot. It represents, exposure to some of your larger names like Zscaler, names like CrowdStrike are large holdings in that, right? Names like Datadog, names like Fortinet. So all of these cybersecurity plays, they had very good earnings. Now, the problem is, well, it's not really a problem. It's just after their earnings, they've consolidated a little bit. So now is a juicy time to be buying this one on a dip, as most of your major cybersecurity plays, look at Zscaler from the highs, right? 25%. Crowd hasn't moved that much. Crowd is not that much down from its all-time high, still about 11%, close to the all-time highs, right? But other ones, Fortinet's kind of just been stuck in a little range right here. Even a company like Datadog's currently doing the good old breakout retest back in the support zone. So they've been nicely dipping over the pretty much the past month. So this is going to be one that I might want to build a position in rather than picking one company. may just want to build a long-term share position in some of these cybersecurity plays. More AI demand, more demand for cybersecurity, guys. Just a very easy play, right? Another one that I'm looking for is Expedia, guys. I just love this company's fundamentals. They are part of my positive narrative trades as well. And the only reason they came down after earnings is because their CEO had a unforeseen departure. Other than that, guys, their earnings were fantastic, and they are currently pretty much in a new monthly uptrend, right? So we're looking for the monthly higher low for a potential just continuation of this monthly uptrend. And I do believe this one will get some lift over the course of the year. I'm kind of eyeing 175, 180 to be my end of year price target on Expedia if everything continues going well for them. So this is one that I'll be looking to probably build a position shortly, or at least play it more aggressively on the short puts down here in the 135, 136 zone. Now, the other one I love is MELI. So MELI I already started a position of 2 shares. We're also looking for this daily uptrend and pretty much looking for the breakout retest on the monthly as well, right? Gorgeous monthly uptrend, retesting this green box as support now. And now at this point, guys, we're just really getting ready to run. I love their earnings. So this is another one of the companies that we're just looking for all of our timeframes, right? We're looking for the monthly higher low. That needs us to find a weekly bottom, which we probably are in the process of doing right now. And even on the daily, guys, trying to reverse the daily around right away. So these lower levels is where I want to be building positions on MELI. I'll be hoping to add a few more shares if we do continue to trade down in these levels. So those are just a few of the ones that I'm looking out for. And now that we don't have any more earnings, guys, I'll be looking to bring a lot more of these trade setups that I'm looking for, just to give you guys more information and give you guys some more ideas to look at here. So hopefully all of that was helpful, guys. If you did appreciate the video, consider dropping a like. Would really enjoy that for the algorithm. Consider subscribing to the channel if you're new as well. Would love to have you here. We're almost up to 1,000 subscribers. I thank each and every one of you so much, guys. It's almost been a year's worth of journey on the channel so far, and looking forward to many more years to come in the future as well. And as usual, guys, if you have any questions at all, feel free to leave them down below in the comments, and I'll get back to you within the first 24 hours. So I'll see you guys tomorrow after the close. Happy trading and peace.